Imagine if you got the secrets of how one of the world's best investors thinks and what he's going to do about the share markets as well as his next moves. Well, not a lot of new investors realize that Warren Buffett every single year writes a letter to his shareholders and tells them exactly what's on his mind, what he's going to do next, and of course, I'm not going to make you read them. I have had a read myself, and here are the 4 hottest investing lessons to make you a better investor this year. My name's Sim. I'm an angel and venture investor. Welcome to the podcast. I am so excited to have you here during this episode. And for those watching on YouTube, look what I found in my suitcase. I'm very bad at unpacking. It is a YouTube styled mug. I had done a Google talk at Google's office in New York, and they gave me some merch and some YouTube merch. So that was very nice. Found it. I'm going to put it in the back of my video, but I'm very excited. The first thing that Warren Buffett mentioned in his new shareholders letter was that he refused to talk about politics. It was actually less about what he wrote, and it was more the fact that he did not say anything at all about politics. He's been writing these letters for so long. He operated Berkshire Hathaway since 1965. And since then, Berkshire Hathaway stock has risen around 19.9%. I might as well just say 20% annualized. So some years it might go up 40%, some years only up 10%, some years even down. In contrast, the S&P 500 in that same time frame has only gone up 10.4%. And Berkshire Hathaway has made $47.4 billion in operational earnings in 2024 last year. What that means is not 44 billion in profit. I need to be clear. It means all the companies that he owns, that he has invested into, they have made 47.4 billion in earnings in 1 year. That is more than the total earning of Nike in 1 year, the total earning of McDonald's in 1 year, and more than the total earnings of Netflix. And what's more crazy, it is more than the total earnings of Nike, McDonald's, and Netflix combined. So Warren Buffett knows a thing or two about the market. But when we look at his letter and we compare it to what we see on the news or what we hear other analysts talk about or so-called gurus talk about, Warren Buffett did not mention Elon Musk. He did not mention Doge. He did not mention J.D. Vance. He did not mention Washington. The political drama, or I'd rather like to say the political circus that we are seeing currently, is not a concern to the world's most largest and probably world's most best investor. He's not worried about what is happening currently. In fact, Warren Buffett did not talk about tariffs. He did not talk about inflation. The word Congress, the word Russia, China, Canada, Ukraine, immigration, none of those words were in his shareholder letter. He did not say tariffs might cause this and therefore I'm doing that. He has this idea that the market fundamentals are the most important thing and you should stay invested and you should ignore the noise. The impacts of what's going on in the world shouldn't be ignored, but they're not important enough for him to say, this is why we're going to be investing differently. Because he's not investing for 1 year. The idea of Warren Buffett's strategy is not how to invest for the short term. It's the long-term game. It's kind of like when you're making friends. You're not looking at what kind of friend is going to be fun right now. Like, right now, let's say you're young and you're single and you have your single friends. But then when you get older and you have children and you start thinking, well, are those friends still going to be around? Like, are they going to be the same kind of friends? And what about when I'm older and I'm more busy? You try and make friends that will stay your friends through all seasons of life, not just your current season of life. Investing is the same. You want to be investing in companies that will stay with you through all your different seasons, not just what's really good right now. The second thing that Warren Buffett mentioned in Berkshire Hathaway's report that I found quite interesting is he acknowledged his mistakes. And I will say, in a world where men do not say sorry, this is global news. Like, Warren Buffett apologized. And I'll read a quote of what he said. He said, sometimes I've made mistakes in assessing future economics of a business that I've purchased for Berkshire. Each a case of capital allocation gone wrong, which basically means where he puts his money, capital allocation has gone wrong. He's invested in the wrong things. That happens with both judgments about marketable equities. We view these as partial ownership of businesses and the 100% acquisition of companies. So he said that he got it wrong, not just in partially buying into companies, because he believes like if you own a share of Apple, you really believe in and you want to own Apple. And also if you bought all of Apple, you own Apple. He views them completely the same. At other times, he goes, I've made mistakes when assessing the abilities or fidelity of the managers that Berkshire is hiring. The fidelity disappointments can hurt beyond their financial impact, a pain that can approach that of a failed marriage. I did not realize Warren Buffett was like the Drake of the investing world. I did not realize he was a sad boy. But in saying that, what is really important to understand, or at least what I took away from this, is he goes, look, we've made some mistakes. Because the purpose of this letter is he's talking to people that are shareholders in Berkshire Hathaway that are waiting to hear what he has to say about why last year has gone well or not. And he's saying that he's made some mistakes. They've bought some companies that were not so great companies, where they've bought all of the company. They've invested in some companies that were not great companies. He's made a mistake there as well. And also they've made a mistake in some of the managers that they have hired. And even though there's been financial impact, he said, it's actually more hurtful, like emotionally, that they've hired maybe people that didn't have the best interest in the company. Now, Warren Buffett goes on to say, he in his letter has said, during 2019 to 2023, I have used the word mistake and error 16 times in my letter to you. So he's saying, hey, there was a time where I actually did use the word mistake or did use the word error, and it was quite regular, over a 4-year period. And I have to say, it is such a man thing to be like, I have made mistakes, and here is exactly how many times I have made mistakes. And then he also goes on to say, and look at Amazon, they've only apologized like once. Like, he's like, look at me. I am human and I make a mistake, and I'm actually a better man because I've acknowledged that I make the mistakes. And I guess the idea is that when we are trying to make good investment decisions, it is inevitable to sometimes occasionally make mistakes. The key is to learn from them so that we are smarter at investing. It is not about avoiding it. If you look at your investment portfolio and there is like 10 different investments that you've made, and some of them have done well and some of them haven't, just remember that Warren Buffett himself, at his good age of like, what is he, like 97, something crazy, he's still making mistakes. And at least he acknowledges them and goes, okay, that didn't work. I shouldn't have invested in that company. And it's good to learn from my mistake for the next year. He realizes what he does wrong and he changes it. He doesn't double down and go, no, this is going to work. Like, this company, it's down 80%, but I'm going to stick it out. I hope it works. He's not scared to say, hey, sometimes I get it wrong. And honestly, as someone who also invests, I found this quite reassuring. And, there are some investments in my portfolio. Most of my money is in broad market index funds. And then there's a few smaller investments that I have in different companies. And some of them have done really well. Some of them have done really, really well. And then one of them is down 40%. And I won't say which, but it's not looking good. And it's nice to know that I am not completely alone in it. And it's also nice to acknowledge that, hey, I get it wrong. I definitely don't have a crystal ball. Like, I'm someone that likes to think that I'm a good researcher when it comes to investing, but even myself, I make mistakes and I'll never know exactly what's going to happen in the future. No one does. Now, the third thing that Warren Buffett included in his letter that was quite interesting is he encouraged people to invest outside of their home country. He said, quote unquote, the best deals are not in your backyard. Sometimes you have to go global. And he explained that since 2019, he's actually been investing in lots of companies in one particular country, and that is Japan. In fact, he's been loading up on 5 Japanese trading companies, and I was able to get those for you. The first one is Itochu, and that is an international trading company, so trading and exporting items, which actually is probably struggling at the time of recording because of tariffs, funnily enough. The second investment that he's made is into a company called Marubeni, which is also a trading company and a conglomerate that hosts a lot of mid-sized companies on the inside of it. Then there's Mitsubishi, which of course we know as an electronics company. They create and sell electronics from as large as cars to as small as air conditioners. There's also Mitsu, which invests in quite a range. None of these are one-off companies, which invest in like a range of things from steel and concrete to metals and minerals and food and retail and energy. So another big conglomerate. And the last company that he's invested in is Sumitomo, which also, surprise, surprise, is another trading company that also trades in lots of different metals and materials. So, why Japan? What made Warren Buffett go, this is the place I want to invest in? I, of course, did some reading. Basically, there's a number of reasons. The first is that Warren Buffett realized that some of the stocks that were being offered were much cheaper compared to their earnings. And this man loves a deal. He loves value investing. You could obviously call him the father of value investing. He also found that these companies paid solid dividends, and Buffett loves dividends. Like, Warren Buffett loves dividends the way I love the Kardashians. Warren Buffett loves dividends the way Zayn Malik loves leaving like a boy band. He is so obsessed with it, and it is so part of his personality. And so you've got companies that are cheaper compared to their earnings. They also pay dividends. You don't have to sell them to make money. And also, this was quite a cultural difference. But in the US, CEOs of public companies, like large executives, they will pay themselves like $80 million, $50 million, $20 million, and no one blinks an eye. They're like, hey, you are in charge of Pepsi. You deserve that kind of money. Or like, hey, you're in charge of Netflix. Like, you deserve that kind of money. Japanese CEOs, that is not the culture. So they do not overpay themselves. They reinvest that money into the business for, I guess, cultural reasons, perhaps. I'm not completely sure. But they, as a result, do not pull so much money out for themselves and reinvest it. And so Warren Buffett sees that as like quite a positive outcome. He's like, okay, good. They're putting that money back into the company. They're going to figure out ways to grow. They're going to figure out ways to figure out what's next. And they're going to just be ahead of the game instead of trying to focus on lining their own pockets. And so this is something you can actually learn from. While most investors, I like myself sometimes, talk about things like investing in the S&P 500, Warren Buffett believes that you should also be looking at international markets to look for some hidden gems. And while you might not want to be investing in individual companies, there are ETFs like iShares MSCI Japan ETF. The ticker is EWJ for Japan. Or you can also research individual undervalued foreign stocks. Now, the iShares ETF is a good place to look if you want to get some exposure to Japan. It's not the end-all be-all, but it's an example of, hey, if I just invest in my home country, that encourages me to have home bias, which is a negative thing. It means that you're only investing in what you know and what you're used to instead of saying, hey, there's a huge emerging market all around the world and I could possibly look into it and see if it aligns with my risk tolerance. And the fourth thing that I learned from his letter is that Warren Buffett loves insurance companies. He said the ultimate business is getting paid before you even have to do anything. His favorite business model, or at least one of them, I don't believe this is only, is insurance, because insurers collect money up front. They're like, hey, okay, you want a health insurance? Pay me every single month. They keep the money and then they pay the claims later and then they invest the difference. And so one of the companies that Warren Buffett really looked at is GEICO or GEICO. They had quite a turnaround story, and in 2019 it was quite a struggling company. And in 2024 it made a massive comeback by having more efficient pricing and better underwriting. And so if you're an investor and you're listening to this and going, Sim, what, am I meant to buy like an insurance company? That's not necessarily what Warren Buffett is saying. He's not saying insurance is the next big thing. He's saying look for businesses where they have strong reoccurring revenue, like insurance companies, like subscription companies, or even like toll roads, like where people are paying to drive. But what he's finding more helpful is in a time like this, when you compare it to maybe consumer good companies like shoes or apparel, they have to buy all the stock first and then sell it. So as a business, you're spending like $1 million and hoping that, you know, all the shirts that you have bought for $1 million sell and you sell them for $2 million and you make $1 million profit. But when you look at companies that you pay up front before the service is provided, cash flow is a lot better. And so you're less likely to run into as many issues. And so when you think about it, investing is not really that difficult. And what Warren Buffett's sharing is like, yeah, it's impressive. Like, you know, invest in insurance and invest in emerging markets and don't look at what's going on in the news. But they're not like rocket science. Do you know what I mean? Like, I read this and I was like, okay, like this is the world's best mind of investing. That's amazing. I appreciate it, but it's not like, I didn't read it and go, wow, That's really insightful. Wow. And I think it just reminds me time and time again that investing is something that anyone can do. If you're investing in broad market index funds, you're investing for the long term, you're doing your research, and you're not trying to chase trends and try and figure out like the next big thing. You're just slow and steady. I think it's actually a fantastic way to get started. Now, if you've enjoyed this episode, please take a screenshot, put on your Instagram story, tag us. It means the world to us because it helps us grow the podcast, reach more people that can learn about how to invest. What more can we ask for than a world where we have more investors? That sounds like the dream place for me. So with that, I'll see you next week.